the New York stocks only AD line in the bottom window, the New York stocks only ratio adjusted volume oscillators with a 39 EMA in red and 19 EMA in blue in the window above, the McClellan volume oscillator ratio adjusted for the NYA and the New York NYA ratio adjusted McClellan breadth oscillator. In the previous video attached here in a link, we noted that when the AD line is pointed down like this and the breadth and volume oscillators pointed up, and NYA price corroborates the AD line for stocks only, that there's a pretty good pop to the upside. But again, that's back not too far before this, when traders and investors did not believe the Fed, so they just plowed right through things anyway to the upside. And then we pointed out we could be going back to the mainstream version of divergences between the AD line for stocks only, price in NYA, and all these breadth and volume oscillators. So you can see they're pointed down here. Let's focus on this little one here. You can see that its companion up here in the volume oscillator pointed up. The ratio adjusted McClellan volume oscillator for NYA pointed up, and the ratio adjusted McClellan breadth oscillator for the NYA pointed up, along with price for the NYA pointed up. So that's the divergence between price and the stocks only AD line, and the volume and breadth oscillators were wrong. So that's the mainstream version of that divergence. And we're monitoring the current divergences. Here's the AD line for stocks only pointed down, the 19 EMA and 39 EMA for the ratio adjusted volume only stocks here, and ratio adjusted McClellan volume oscillator for the NYA pointed up, breadth pointed up, and price pointed down, agreeing with the stocks only AD line. And the last two times back here when that happened, there was a pretty good pop to the upside both times. So it would be good to monitor these volume oscillators here, the 19 and 39 EMAs, and the McClellan volume and breadth oscillators ratio adjusted for the NYA, to see if they start pointing down to corroborate with price and the AD line. And if that happens, we're in for a lot more downside. But if there's a pop pretty good to the upside that's sustained for a couple of days, few days, then this did exude the similarities between these two over here when price popped. And it never seems too many people are interested in the big board for the S&P 500 support and resistance, but in there is this New York traditional McClellan breadth oscillator to get back to zero, and it would require 2,070 advancers over decliners to get back to zero, and it can go a lot lower than this. 3,000 to 6,000 would be severely oversold, so it has a lot more room to the downside, believe it or not.